Hey, the Guaranteed Retirement Guy here. I want to talk to you today about buying a pension annuity. So, pension annuity. Can you get multiple pensions? Well, of course, if you work at different companies, you've got different pensions from different companies. But what about buying a pension through, purchasing an annuity? What about doing that? What about stacking your income with different pensions that you purchased? So you can certainly purchase an annuity through your company. Typically, pension plans are annuities and they give you different payout options. I'll give you a single life payout option if it's just you, maybe a joint life if you're married and you wanted to come out for your significant other. The difference on those is typically when you pick the joint survivor option, they will say, "All right, we'll pay you a certain amount each month, and if you die, your wife gets half." Right. So, otherwise, you can choose a much lower option and have it just stay level for your life and your spouse's life. But typically, there are better options out there. And so, when I'm talking with people, especially when I talk to some professors and some teachers out there who are typically invested in the TIAA, typically they have their money already set up in annuities, but the payouts are not as high as what they could get somewhere else. And the same with a lot of other people that I work with that have their money in pension plans. Typically, the payout there is not as high as they would get if they took that lump sum payout and they put it somewhere else. So if you're looking at different pensions, maybe you're looking at a pension with your company, or you have an annuity already set up. Maybe you're with TIAA. They used to be TIACREF is what we would call them, but they're now TIAA. They've got $1 trillion in assets. Most of the teachers, professors, people with the school districts will have their money with them. But the payouts, at least from what I've seen, are not as high as what they could get somewhere else. So, anyways, it's worth sitting down with a professional like myself and going over the different options because I have access to everything. Okay, I look at everything across the board. And if you've got a better payout where you're at, then just stay where you're at. But at least it's worth finding out if you can get better because you've spent your whole life building up those assets. You spent your whole life building up that account. Probably would be wise to make sure before you actually activate that income to make sure you activate it, getting the highest possible guaranteed payout that you can. And a lot of times when you do a joint payout, you're getting a much, much higher amount than you would if you just did a joint payout with your current pension plan. All right. So here's what I want to do. I'm going to share my screen. And what I want to do is I want to actually show you how you can purchase your own pension plan. And you can choose whatever company you want to work with. How's that sound? All right. So we're going to go into, let's see here. I'm going to go in here and say, all right, let's say I am 62 years old. Let's say my wife is 58. Okay. So she's a lot younger. She's 4 years younger. This is a scenario with me and my wife. She is 4 years younger than me. So the payout is going to be the less because she's a female and typically females live longer than guys. Although if I have it my way, I am going to live till I'm 100 years old. Okay. So she'll live to 96. I'll live to 100, or she'll just keep living beyond that. All right. So 62 years old, 58. And let's say I've got 600,000. Okay. Maybe I have $1 million, but I only want to put 600,000 into an annuity. You don't want to put all of your money into an annuity, but you want to just put just enough to cover the income that you want. Okay. Okay. So $600,000. And let's say I want to take income right now. Maybe I want to retire right now this month, and I want to start taking guaranteed joint income for both me and my wife. Well, you can see right now that the highest paying one is with Midland. Midland's got a couple of higher paying ones, just depending on what you're looking for. But you can see it's paying out $3,400.20 per month. That's joint. So me and my wife, I'm taking it at 62. I'm taking my Social Security early. So I'm taking it as early as I can. And she's 58. And we're gonna live off this for the rest of our life. So this income is guaranteed to never, ever run out. This is my personal pension, joint pension that'll never run out. So if I'm taking 34,000 out $3,400 a month, and I look at that for annual payouts, $41,000 per year. So let's look at that. So $41,000 per year. My wife's 58. she's probably going to live, let's say, at least 35 years, right? At least 35. So 35 times 41,000 is $1.4 million. So it's not bad. So I'm pulling out $1.4 million. But you know what? Maybe I'm going to take Social Security right now and I'll work part time. Let's say I don't need the income right now. Let's say I'm going to say, you know what? I'm going to work part time because I need to have insurance before Medicare at 65. So I'm going to work part time for 3 more years. Okay. So I'm going to just drag this out 3 years. And now let's see which companies would be the best for this. Okay. So we can see the two top ones are Sentinel Security and AIG, which is now known as Corbridge Financial. So we're looking 45, 4,700, 47, almost $48,000 per year. So if I convert that back to monthly, we're looking at almost $4,000 per month, guaranteed joint income. That's pretty darn good. So much higher payout for waiting 3 more years. That might be worth it. Okay, so maybe I'll work for a few years, work part time. I'm taking my Social Security, or I might defer my Social Security and take a higher payout for Social Security as well at 65. Now, you have your choices. You can do whatever you want. It's just if you decide to purchase a pension, you can purchase multiple pensions. You can purchase one for a couple $100,000 that should turn on income right now. Maybe you'll purchase a second pension, with an annuity, and you'll turn on income from that in another 3 or 4 years from now. And then maybe you'll purchase a third pension and you'll turn on income from that maybe at age 70. So that's called the laddering approach. And I talk about that in another video, but it's a great way to straddle, give yourself income raises over the years. So especially if you're trying to fight inflation, you might want to put some money into one to give you a little bit of income now, then another one to give you more income, and then so on. You can just activate that income as you need it. And if you want to use it just for later on, maybe for long-term care, a lot of times people will fund these just for long-term care. That's kind of their long-term care strategy. Because a lot of times when you need long-term care or you need to prepare for it, maybe you're not healthy enough to qualify for the plan or it's too expensive. And so with that being in mind, you can purchase a pension to turn on later, and it's a much, much higher income. I mean, look at this. If I were to drag this out 25 years, you can see how high that income goes. My pension now that I purchased for $600,000 in 25 years, let's see, I'm going to be 87 years old. Whoa, look at that. Monthly income, $12,000 every single month. And that's joint. Okay. So I'm 87. My wife is 83. She's probably going to take that out for at least 15 years, just with the longevity in our family. That's a whole lot of money. So if you look at annual income, that's $149,000 a year. 10 years, that's $1.5 million. Not bad. Okay. 15 years, which is probably how long she's going to live. That's well over $2 million in income. So pretty good. So when you're thinking about pensions, okay, when you're thinking about maximizing your pension, maybe you got money sitting in a 401k and you would like to convert it to a pension. You've got a deferred pension right now and you've done a defined contribution plan and you didn't know really how much the pension would be until you got up in age. Or maybe it's a defined pension and it's just a certain amount and it's not high enough and maybe they'll give you a lump sum payout. If they give you a lump sum payout, you can put that right into another pension with these other insurance companies that will typically pay you a lot more. And so I can help you with that. If you want to at least look at the numbers, you want to compare and at least compare across the board. So you know that what you're getting is the best or maybe not the best. And maybe there's other options out there. I can help you do it. And it's easy to set up. It's easy to do the transfers. And, it's not going to be a hard sell. If you just want some information, great. Just book a call. We'll look at the numbers. I'll share them with you. And then you decide. It's your call. It's your money. I'm just there to educate. I'm there to help. And it's a 30-minute call. So I'll just answer your questions. We'll play with the numbers. And then you kind of just, you decide if you want me to follow up with you. So it's pretty easy. Book a call. You'll see a link down below this video. And that goes straight to my calendar. And I look forward to seeing you there. So thanks again for watching, and we'll see you in the next video.